COVID-19 has created serious negative economic consequences for the global world. Every country that is faced with the pandemic is going through a period of recession due to the extreme low levels of spending by the consumers and the businesses. Now this has resulted into huge losses for businesses, declining incomes, declining standard of livings, creating unemployment and increasing the poverty, creating complete chaos and wreaking complete havoc in the affected economies, especially for the poor countries. Now, every country is trying to combat the economic crisis due to COVID-19 by coming up with different policies. But there is one single policy that almost every country, almost every affected country has followed, and that is the reduction in the interest rates by the central banks. But why are central banks reducing the interest rates? Why is it so? Why is it that banks are reducing the rate of interest to fight the recession? Let's check it out in this video. So interest rates form part of the monetary policy of the government, and the government from time to time brings changes in this monetary policy to achieve certain objectives. For example, to stimulate more economic growth, to boost investments, to increase GDP, to increase more output and create more employment opportunities. It may bring changes to this monetary policy from time to time. So one of the ways it can achieve all this is through the reduction in the interest rates. So what actually happens is that when the interest rates will fall, the cost of borrowing the loans from the banks will become cheaper. It will become easier and more convenient and less expensive for the general public and the businesses and the consumers to borrow money from the banks. So what will happen is that they will start borrowing more money from the banks to finance their various activities, to spend that money on various objectives. For example, consumers may spend more money on, for instance, buying a house, buying a car, spending on furniture, on household items, on food, on entertainment, clothing, etc. And the businesses may spend that money on stimulating growth, to finance their expansion, to invest in more technology, and etc. So ideally what happens is that the money floats away from the banks into the hands of the general public and the businesses in the form of cash. And the whole idea is that's what we want actually, because the effect of this will be that when consumers, public and the businesses will spend this money on the economy, to finance various projects, to finance various expenditures, it will create more jobs in the economy, it will improve the incomes in the economy and increase the GDP of the country. And that is the whole idea, because right now we are going through a recessionary phase. The world is going through a recessionary phase due to COVID-19, and the whole idea is to uplift the economy, to boost the economy, to stimulate economic activity in the country. And one of the ways that the governments and the central bank can do this is to reduce the rate of interest, because the effect is that it immediately pumps in more cash into the economy. So I hope guys you understood the video, and that is the whole concept of the reduction in the interest rates, to bring the economy out of recession due to the global crisis that we are going through, the economic crisis that we are going through. And I hope you enjoyed the video. Till then, see you next time.